Hey there! 2 weeks ago we covered SHIB and we talked about a big move was coming, and indeed right after the session, the following few days, it really broke out and then tested a level that's close to the yellow key level of well, 4 zeros, 145, easier to say. So what's now going on is that it's finding support above the orange key level. So let's dive into the charts and see what's going on. And welcome to the Wyckoff technical analysis session for SHIB. And this weekly chart over here, the yellow dotted or dashed lines were the indications that we used 2 weeks ago on September 6th that I mentioned a breakout is about to come. Not only these lines were the indicators, we also look into the Bollinger Band Keltner squeeze, which in the weekly time frame, the squeeze is still going on, meaning the even bigger move has not started yet. So this is probably just the beginning for that move. So since these lines has passed, it's time to adjust them and see how we're going to assess the next possible date of movements. So let's adjust these lines, the bottom ones as well. I need to move this a bit so I can see the wick. That's right there, that's the spring, and eventually this area. So it turns into a pennant, pretty equally sided, not upwards, not downwards. So currently the intersection point of these two lines, the bottom support, the top resistance, points to November 3rd. So this may well be the next breakout time frame from now till then, about 5 weeks to 6 weeks time, after the last one we covered. So let's quickly shrink it a bit and look at the Wyckoff stages. As of this moment, it looks like it's somewhere near the end or middle late stage of an accumulation cycle. So I haven't tagged, just notice I haven't tagged this automatic rally right over there after the selling climax. We have two signs of strength already, and what we were expecting next, hopefully that happens in a way that show us some backup or last point of support behavior. This looks like pretty much what it usually looks like, a platform period. So if I enlarge it, basically it's like a rectangular box trading area. So that's a lot of times you see this before the actual price skyrocket. As usual, things always have exceptions. I hope this is not an exception, but the usual case where the price eventually climbs. So while we are waiting for the price or the price actions, the candlesticks to move towards beginning of November, the first stop through the climb towards the buying climax is the preliminary supply. We hope that that phase would at least pass the blue key level of 240, and eventually the buying climax ends above this the top edge of the white box, that's 3029. That level, this white box, is what I call the long-term playground zone, meaning the price of SHIB has been traded within this box 80 to 90% of the time since 2021 till now. So that's a very key level to defend if SHIB has to show us it still has a long-term speculative value, not to mention like investment value. Because in March 2024 as well as November, December 2024, both peaks, both buying climaxes were above that line. So we hope to see the same thing happening. So in the long run, it means whenever SHIB goes to seek its bottom and accumulate, eventually it can come back to that level during the distribution cycle. So that's the long-term behavior that we hope to see. Obviously, it's still far from what we had back in 2021, but it's fine. It is what it is now because there are a lot more competitions in the crypto world, and staying about the same level as last year, it's already a pretty good sign, meaning the support for SHIB hasn't died down and like people shifted to other altcoins. So remember, that's the big picture. Let's go to the daily and see what's going on. So we know a squeeze is happening in the weekly time frame when we look at the Bollinger Band Keltner squeeze before dipping into the Wyckoff stages. So let's hide the drawings for now and quickly check the Bollinger Band Keltner squeeze for SHIB. Let's use auto and enlarge it so it's easier for mobile users. So here we saw that the squeeze happened during the time we had the last session when I covered SHIB. We did it on the 6th, and then I already mentioned the move was coming, and indeed it happened. It tested the 1500 level, and then now it comes back down. And what we can see here is the purple line the top started to flatten out and slowly declining. So let's switch this on again. Enlarge it so it's easier. You see the staircase coming down, right? And the bottom, obviously, it's going towards the orange. Meaning, if SHIB continues to trade sideways for the next few days, another squeeze will happen. And that's when the force is being gathered and the next swing will appear. So let's switch on the drawings, switch off this indicator for now, and look at where we are heading. So interesting, right? You see the price keep bouncing between these two lines that we have drawn, and it's getting narrower and narrower. So if for the next 1 or 2 weeks it eventually reaches a tight enough point, the breakout will happen. And currently, previously I said this is the selling climax and automatic rally, sign of strength, second test, and this it's an interesting level because it doesn't look like it's the buying climax or it's a very low buying climax, so it still can be. That's the interesting part or challenging part in the daily chart when we try to assess a Wyckoff pattern, because the whales, the big guys, doesn't work on daily time frame, they work on the bigger ones, the weekly and the monthly. So anyway, let's try to put some tags in that I think that's most probable for what's going on. So that I will see it as a preliminary supply, the PSY, and then the buying climax. This is obviously the automatic reaction that comes down, and then an LPSY. So a lot like what happened back in late July to end of July. So what we have here, like mid-September, and then we're getting into late end September, and it seems like it's coming down for another accumulation. And the range, I already mentioned, is getting narrower and narrower. And let's go back, zoom out a bit. I want to move this box a little to the side, so we've got more room. Lock it, and just want to quickly check and adjust the line. So you see this buying climax, the tip of the wick is just a bit outside of the lines. Okay, now it's inside. And then the bottom, this test. Well, some people doesn't like to make the lines too tight, because it's like a rough estimation anyway. This point is not moving too far from what we mentioned in the beginning. So in the beginning I said it's around the first week of November. Yeah, it's still not too far off. November 9th seems to be the date of the cross section, but then the breakout usually happens before that tipping point, so it's totally fine, like with a day or two difference. The key is we expect a breakout to happen. So in terms of candlestick pattern analysis, a pennant doesn't indicate, according to the textbook definition, doesn't indicate which side the breakout will happen. But some analysts buy into the idea that if the price action enters a pennant in a particular direction, it will eventually go to the same direction when it breaks out. So this time is entering this from bottom up. So according to that theory, it should exit bottom up as well. Let's see whether that's the case, because I already mentioned in many sessions that there are always exceptions. So the textbook definitions are good reference, but not like 100% definite. So remember this key point. And finally, since we have talked about all this Wyckoff, the candlestick, the squeeze, just go back to the macro, the weekly, to see what's possible for the daily. So we all know these two yellow lines are basically constraining the price actions right now, waiting for a bigger breakout. So because even weekly is being bounded by these two lines, daily couldn't escape that pattern as well. So even like however much is swing in the daily, let's say I'll give you an example here. Currently it's around the orange key level, right? And if even it swings to the upside, which we've got more room up there compared to going down, that's around a 13.5% rise. Not too bad for a short-term trade to get a 13% like return. If we go to the weekly, that's if you're looking for a longer time frame, that's not the percentage you're aiming for, absolutely. So if you get in right now and you hope to see it at least challenge the blue line, that's an 87% rise. So it really depends on what time frame you're trading in and how patient you are, plus how much you need for your capital to keep running. So some people can set aside a bit of money and let it stay there for a few months. That's why they trade in the weekly time frame. It doesn't matter. They know they get in at the right level according to their risk appetite, and then to just let that portion of capital to sit there and then wait for it to climb to a level that they see sufficient for what they're seeking for. Some people just like to trade in a more frequent time window and getting more frequent, smaller percentage of profits, and then eventually trade along the waves. That's totally fine. That's completely personal preference. So that's your choice. I'm not going to dictate anything. I'm just showing you different time frames and where we are, so you can take a reference and see. But remember, however confident we are, always set a stop loss. Don't leave your order open without the protection. That's the biggest friend we can have to guard our capital. So thanks for joining me.